Hey guys, welcome to Live Trading Thursday. David Verbruggen with you again. We're going to look at some good things going on in the market here. But as always, just keep in mind that all the examples that we're going to look at in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. Guys, you know the drill. Go ahead and get all your questions, tickers, stocks you want to look at, any trades that you're considering, get those in the Q&A or in this case, the comment box, right? Whether you're on YouTube or Facebook, that comment box will let you go ahead and put those in there. So get all those in there so that we can take a look. It's always better when we have more interaction, right? So there you go. CJ's already got us started off. So we're going to hit those first right after we do the market overview, because we always want to start by looking at the market. What is the market doing, right? Then I can see, okay, what are these stocks, these individual stocks doing in relation to the market, right? We might be seeing some stocks right now that, the market's been pretty hot the last couple weeks here, a week and a half or so. And if you have a stock that is not doing so well, maybe just kind of going sideways, maybe that's in a prime position to really start tanking if the market does come down. So let me share my screen here. Let's get a better idea what we're looking at here. Here's the overall market. You can see this downtrend we're in. Did pop up a little bit above this downtrending line. I'm not saying this line here is perfect by any means. It did pop below it a little bit here. So if we have an anomaly to one side, it's very possible that we get an anomaly to the other side. So it did pop above here. We also ran into this other area of resistance. You see that was support right there. That's through the gap line. Some resistance right here, and that's where we are right now. It opened right that line and has come down a little bit since. We're still kind of waiting for that other shoe to drop, if you will, right? But if that does start to move down, we would want to be ready with stocks that are ready to move down significantly with the market. And we want to start finding those stocks now, not once the market has already made its move. Because once the market has already made its move, at that point, we're going to be chasing stocks. So I'm not saying we need to get into stocks or, bearish option trades now. I'm not saying we need to get into those plays now, but we do want to have them kind of on our radar. That way, when we see what we want in the market or the price action of those stocks, then we can go ahead and get into the positions that we're ready for. But we don't want to be chasing it after the fact. So with that, that's what we're looking at. I do still think we're going to start heading down, but who knows, right? I could be surprised. We might head down a little bit, hit the 10-day EMA or something like that, bounce up, break this line, break through the 100 simple, and be on another bullish run to maybe go retest 4,600. That absolutely could happen. This is why we have stop outs, right? Because sometimes we're just not right. And I don't care about being right in the market. I care about being profitable. One of the best ways we can be profitable is to stop out. You might be thinking, what? Stopping out, doesn't that mean an expense? Yes, it does. But we limit that expense. We keep it smaller so that in the long run, we can be profitable. I'm not looking to be profitable on this one particular trade. We're going to look at several potential trades. I'm not looking to be profitable on that particular trade. I'm looking to be profitable over the next 100 trades. How do I do that? By keeping my losses, my expenses smaller with stop outs. Anyway, I rambled on pretty long there, so let's just jump right in here. EQNR from CJ. EQNR. Let's take a look and see what we've got. All righty here. Looking at a couple things. All reds, which that's kind of fun to look at right there. Doesn't necessarily mean it has to move down. In fact, it's been uptrending, if anything, the last little bit here. Let's grab a few lines on here. That line right there is something I would want to see broken before I got into anything bearish. Now you might be thinking, hey, what about bullish? Okay, well, I'm going to guess you're not thinking bullish simply because you do have those all reds there. Generally, there's a lot of things going against it. But I do have this uptrend going here. Earnings is behind us, so that is good. You know, the pattern, if fundamentals was good and the valuation was good and we had some insiders, you know, some big boys that were getting involved, the pattern is really nice for a bullish trade, actually. Now, we don't have market tone in our favor. We don't have the fundamentals. We don't have all those things. So there's enough things going against it. I would be hesitant to get in bullishly. Although today, otherwise, could have been considered an entry point for a bullish trade. Now, would I want to get into this bearish? Not until the technicals are broken down too, right? I want to start seeing some, well, first of all, this uptrending support line broken. I want to see that broken. Now, what if we draw another line somewhere around there? Maybe we pull up, we hit that line, we come down, we break this downtrending or uptrending support line. We bounce up again, we come up here, and we turn around, fall back down. That point, I might be interested in getting to this on to the bearish side. But before that happens, I would not be interested in it. This is kind of an interesting one because there's so many things going against it, yet the pattern is one of the prettier bullish patterns out there. So kind of have one of these things where it's oh, what's the word? I don't know, but you know, they're working against each other. Kind of want to stay away from that until things are lining up better. All right, CJ wants to look at IBM as well. Let's take a look here. IBM, you know, that was pretty bullish, a nice bullish pattern actually earlier on in the year. That broke down, earnings gap up, moved up. I think we looked at this one. Maybe it was last week. I don't remember. Not a great pattern to really work with at the moment. We could maybe consider a line on top here. Even getting a line on at resistance, you know, it might be like a zone of resistance, some resistance in here, resistance in here, resistance again. So I could leave that line on the chart, but there's not an established pattern that I can really work with right now. So I'd be passing on this one. I wouldn't trade it to either side. KMI, let's take a look at KMI. Kinder Morgan. All right, now this one has a little bit more of a bearish look to it, right? You can see a high, lower high, lower high. Let's grab some lines on here. There we go. So there's that line. Not a great support line that we could really draw in here. And even though it has a bit of a bearish look to it, the pattern itself isn't necessarily the prettiest. For most of the last year, kind of sideways, maybe starting to go down a little bit again. But also when you look at this chart, you can see it looks like some really nice big moves, but then you look at the pricing and it's actually not moving that much. You can see this absolute high here, $18.30, and an absolute low here, $15.90. And that I'm talking about in the last 6 months. That's what those highs were, right? So you're looking at less than $2.50 difference from the very high to the very low. So pretty docile as far as its movement goes. So there does come a point to where if the stock's just not moving much, it's hard to do directional plays. Now we can still do use credit spreads, for example, and still potentially make money on that because they're less directional or non-directional. But you know, that could be something to be considered. I haven't looked at the options. It's still okay. Bottom of the green, so you should have some decent options liquidity in there. Regardless, at this point, you know, where is it? If I were to clone this line, I don't think we're going to get a good support line on the bottom. Yeah, if I were to put it, say, there, for example, we're kind of in the middle of that, the middle of the channel there. So that's a tough one as well. I would wait for that thing to come back up to a solid resistance line, fall down, then we could enter a specific trade there. All right, Watts wants to take a look at CRWD. CrowdStrike. Let's take a look here. That one is in a nice uptrending pattern right now, actually. Um, you can see it moved up and it's made that move up again, almost the same distance as the last couple moves up. So that makes me think, especially with today's candle, maybe we're going to start coming down. Now, with that, we do have this line I had drawn on here. That was some pretty decent resistance here and here, gapped up above that. So maybe if it can chop along sideways for a little bit and then put in a nice little bullish signal, that could be good. But keep in mind, you've got earnings coming up in 3 weeks here. That's a little less than 3 weeks, actually, right after Thanksgiving there. So you probably got 2 weeks worth of trading days, actually, before earnings. So that might affect your decision. You could also keep an eye on this one and wait until after earnings before jumping in. Now, as with where the market is, this is probably one of the nicer looking bullish stocks out there. So good find on that one. Keep an eye on it and see if you can do something with it maybe later on, maybe after earnings. Shell. Let's take a look at Shell. This is also one that actually looks pretty decent to the upside. I've got a longer term line here. Let's see if I can, something like that. Does that work? There, catching the bottoms. Not a perfect line by any means. Let's see if I can duplicate that, clone it to have a decent resistance line. Nah, the resistance line is going to be tough on this one. If anything, maybe something like that. I'll leave that there for now. You catch some of the tops there, some of the tops there. Same with their little anomaly to the downside. It may be an anomaly to the upside as well. Earnings just happened. It's been pretty volatile the last little bit here. But, as far as this pattern goes, that could be considered, like today could be considered an entry to the bullish side, right? Now, do we want to hop into a bullish trade with where the market is? I don't know, but oil or this is energy. So energy, fossil fuels, oil, whichever, that kind of has had its own, it's almost like its own market tone, right? It doesn't generally follow exactly what the overall market's doing. It goes and does its own thing. So, and that's perfectly okay. If you find a stock that's not following the market and maybe the market's down, but you want to trade bullishly, you find a stock that just doesn't care what the market's doing. It's going to do its own thing and head up, then that's okay. You can follow that. So as far as a bullish entry goes, this is probably one of the better bullish entries you can find today, right? So very, very good look there, Watts. Again, not saying it's going to move up. It could absolutely fall down, which what do we do again? We have that stop loss. That's why what I harped on at the beginning of this, and that's why I did it, because we just don't know the future. We don't know what is going to happen. So we always have to have that stop loss in place to protect ourselves. All right, fantastic. We got several here. I love this interaction here. So I'm going to kick it up a notch here. We got to start flying through these. Doc wants to look at GPS. All right, let's grab a few lines here. This one, that's really hot, right? I could get a line on here, but it's really the 10-day. Let's hide that real quick. See how the 10-day, 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 it's just been bouncing off the 10-day. Really nice movement, actually. I'll put that line back on there just so you can see that. So today, could be considered an entry. Yesterday could have been an entry. Today, some confirmation if you want, but you've got earnings coming up next week. The 16th, I think, is Thursday. So there we go. That's going to make it tough. If you want to get into this, just make sure that you're out by the close on Thursday. So it give you a week. It give you a week, and with the movements that it's been making, there's a possibility that you could still be profitable by Thursday. It may not make that full move that you're wanting to, though. So there you go. GPS, MYO. Let's take a look at MYO. All right, not familiar with this one here. First thing that catches my eye, average volume on the left here, below 300,000. You can also tell them the price action just doesn't look as fluent. Looks a little jaggedy, a little rigid. That's the word, a little rigid. It doesn't flow as well as, say, GPS, which has a much better volume. So MYO, regardless of the pattern, and the pattern and that really is shot up here. Got earnings that just happened 2 days ago. Super volatile. Oh wow, look at this. It's what it was, a penny stock just a few months ago. Now it's almost $2 a share. So lots of volatility in there. Got to be careful for that, right? Let's say we loaded up here, $2 a share, and it came back down into this range. Well, you would have just lost like 40-45% if you didn't stop out, right? And I would assume that one wouldn't stop out, because if we're getting into this trade here, we're not following our rules of at least 300,000 shares traded a day. Anyways, I would stay away from that one. It just doesn't meet the criteria that we're looking for. All right, XOM, another energy, ExxonMobil here. Oh, wow, this one's not looking as good as Shell. That's kind of straight sideways the last year here. Let's look at a 3-year. Okay, I gotcha. So 3-year weekly chart was uptrending nicely, sideways for almost a full year. There's things we can do with that, right? Using credit spreads and even if iron condors, putting a couple of credit spreads together, there's things we can do with that. Could be coming back into a zone of support here. So if we do bounce up and it starts heading up, maybe a bull put, you can consider that. So ExxonMobil, not looking as strong as Shell, and this one, that's a nice move. That's a nice move. ExxonMobil not looking as strong, but that doesn't matter to us as traders, as long as it's in a good pattern. And that's a pretty decent pattern. Again, look at this weekly chart. Pretty sideways, kind of rolling. So hopefully that can keep rolling, because all we really care about is predictability, reliability, things like that, so that we can go ahead and be consistent in our trading there. All right, moving on. I've been saying that last week. Oh man, I don't remember anything from last week. We'll see how this goes. Last week, I liked credit spread strategy. Can you share your most current trade credit spread? Oh, that's a great question, Ivan, that I'm not allowed to answer. Since we are SEC registered, got the Series 65 license, due to compliance reasons, I'm not allowed to share anything about my trading. I'm not allowed to share what I'm in, what I've done, all that kind of stuff. And those rules are simply set up to protect you. Let me give you an example. Let's say, I'm not in Apple right now. Let's just use Apple as an example. Let's say that I let everyone know, yeah, I'm in Apple. And so everyone loads up on Apple thinking, oh, great. Well, if he's in, this thing's surely going to work out. But actually, I'm in a put, right? What if I was actually in a put? Well, then you might be loading up with shares or calls, and maybe it actually goes down. Or maybe it was bullish and I was about to get out, like I'm getting out tomorrow or at the end of the day, something like that. So there's many reasons why we're not allowed to share what we're in or what we just did, because it can skew your perspective. And at the end of the day, it's really not even going to help you. If you knew what I was in, if you knew, all that kind of stuff, it really doesn't help you. What matters is, what are you in? What are you doing? What are you learning? Where are you paper trading and practicing? What's your system? What's your process, right? It's going to be different from mine. Everyone's going to have a different system, a different process, a different trading plan when it's all said and done. And part of our journey as traders is going through figuring out what is going to work for us. And it's a lot of trial and error until something hits. And then you stick with that, see if you can even make it better, right? So this is a lot of what we teach in our full education program. It's to be able to give you multiple strategies so that you can learn a bunch of different things to see what works for you. We teach over 40 something different strategies total. And it's not that you should trade them all. I sure don't trade them all. but we want you to be able to find out what are the 2 or 3 that are going to work well for you. What do you jive with best? So that's a much broader conversation than the scope of this short little webinar here. But it kind of gives you an idea of what we're doing in the education program to help think through what do you need to do to become a better trader or to become a trader, period, right? And we specialize in taking people from zero through their journey, right? So great question. I know, I apologize, I can't fully answer that maybe to your liking, but I hope I was able to kind of give you some insight as to why and what's going on there. All right, John wants to look at fast. Let's take a look here. We'll do this one fast. Okay, uptrend here. Probably not gonna be able to get great lines on here right now. And recently, what is this here? Okay, this was last week or Monday, I think someone was asking about a bear call spread on this one. So that's what that box is. So recently here, could throw that line on there, but could also throw another line on here to the upside, something like that. It's not a great pattern, frankly. Earnings kind of jacked it up too, and so it popped up, came back down, moved up, almost is looking like an ugly cup and handle, but it's not popping up to the upside like we would expect. So probably would want to stay away from this one. And at this point, you've probably heard me say that many times. Probably want to stay away from this one. There are pretty patterns out there. We've seen a couple. Really want to stick to trading the pretty patterns. They're just simpler. They're clearer. Our brains get less cluttered with what is going on. You know what I mean? So stick with the pretty patterns. Keep it simple. Keep your management plan simple as well, right? That's what we want to do. All right, we're going to look at 4 more here really quickly, and then we're gonna finish it off with PLTR. That's the last one. Even if more come in, we are running low on time here. IDYA. I'm not familiar with that one. It's lower on the volume, not too low for stock trades, but too low for options trades. Let's grab a line on here from this gap. Can draw a line there. That works well with the wick down to the downside there. Let's try and clone this line. Long story short, wouldn't trade this thing bearishly because it is uptrending, but it's not at a buy point bullish right now. With the candle it's putting in right now, one could say, oh, what if I just trade a counter trend? Okay, there are people that do counter trend trade, meaning they're going to trade bearish in an uptrend. Yes, some people do make money. The question is, do you really have an edge? I say you have a lot less of an edge. I would much prefer you wait until this thing comes back down and then produces a bounce, and then you could get in. And in fact, I just mentioned the counter trend thing. You'd have to use options on that, right? We don't trade options with the average volume below 1 million. Why? Because if you go to the options page here, you can see the liquidity. Oh, that's even worse than I thought it'd be. I mean, it is pegged on the red. Options are trash on this one. So we're not going to do options. Only can do stock trades, and we're going to trade that to the upside. Wait for this thing to come back down. If it produces a bounce, we could consider getting in with some shares for trade on IDYA. All right, PETQ. Did I get that right? Yeah, PETQ, PETQ. All right. Average volume, about 400,000. So again, no options on here, just stock trades. What are we looking at here? Let's grab a couple lines. You can see from this gap line here, some support. It came a little bit below there. Don't really have a good resistance line yet. Earnings just happened and got kind of wild right there. So, if you wanted to, again, not the prettiest pattern, frankly, it just isn't. But if you were aggressive and you had a nice clear candle tomorrow or so, one could consider getting into a stock trade there. Again, not options, just stock trade. And then, what an advantage with just trading the shares of stock too is if you take a stop out, your percentage is pretty low. Generally, we're looking at an 8% stop out max. That's max, right? We teach that in our step one class, but in reality, there's many trades where you should be able to limit that to 4 or 5%, right? So 4 or 5% expense on any single trade should not cause us any heartache at all. So an aggressive trader, again, could consider that if it pops up tomorrow, but I don't love that pattern necessarily. It had made a nice pattern in here. So if we're thinking, oh, maybe it could start to move up again, potentially, but just have a good plan in place. DUOL, let's take a look. Also haven't heard of this one. Same thing, volume, not great for options. Could only do stock trade. Earnings gapped up quite a bit here. And so nothing we can do on that. It's far removed from any support. It'd be tough to get a solid support line on there anyway. Stock's been going kind of sideways, maybe slight uptrend the last 6 months or so. Wouldn't do anything with this on a stock trade. So nothing for Duolingo. Last one, we're going to check out PLTR. All right, there we go. PLTR, all greens. That's kind of cool to see. But where are we in the pattern here? Right, it's moving sideways. Got a decent support line drawn here. Let's extend that a little bit. Decent support line, and resistance is kind of like this zone here. I can just move this guy up. So that wick right there went above it a little bit there. Didn't quite make it that time. So kind of a zone of resistance. That's where we are. We're closer to resistance than we are support, right? Had a real big move up on earnings. So not much that I would do with PLTR right now, but I'll leave you with this, right? I'll leave you with this. You see this little box here? This was that little box was a credit spread that a student had put on, and they had held that credit spread over earnings. Now, I want to use this example just to caution you of something not to do, right? We don't ever want to hold a trade over earnings, especially not a credit spread. In this case, the big gap up on earnings worked in their favor, and they were profitable on that trade. If they held it to expiration, it would have expired worthless. Therefore, they would have made a max profit on that particular trade. However, what if the gap had been a gap down? It would have been a max loss, right? So we use that as a good learning lesson a week ago here. Yeah, it was 2 weeks. I don't know. Whenever we looked at that, that was a good learning lesson for all of us to say, hey, this is why we don't hold over earnings. They got lucky. They might have made, I don't know, 15% or so on that trade, but they could have lost 100. So they don't even have that reward to risk ratio working in their favor for kind of a gamble of which direction is it going to go. And oftentimes that's what holding over earnings is, kind of a gamble. So there we go. That's that. Fantastic. Now, guys, I let everyone know last week about the Charts by Tradeway trainings that are available on YouTube. Want to bring those to you again. Now we still got some people asking about that, so I just put that in the link there. We've got those on on YouTube there for your ability to just go ahead and work through some of those videos just to learn the platform better. A big part of trading is knowing how to use the tools, right? I mean, it's not the biggest part of trading. The biggest part is our psychology, but we need to be able to know how to use the tools in order to accomplish what we're trying to do. So with that, go ahead and check out that link. That way you can go ahead and see all the videos. There are about 32 of them, anywhere from 1.5 minutes long to 1.5 hours long. So enjoy. And if you don't have Charts by Tradeway yet, check out chartsbytradeway.com. and you can get some good information there. We'll see you guys next time. Bye.